Well, hi everyone, and welcome to the Buffett and Beyond Saturday Stock Market Recap, June 14th, 2025. And remember, folks, if you want to live on this beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. And all of this is brought to you by Buffett and Beyond Research. And remember, for those of you who want a full month free subscription, you want to see more of these videos, we come out with 3 videos every weekend. We come out with 4 letters during the week. If you just want to see those, a little bit more of this, sign up for a full month free subscription from our website, buffettandbeyond.com, right down here. Buffett is spelled with 2 F's and 2 T's, buffettandbeyond.com. Sign up for the full month free subscription. All we need is your name and your email, and we'll put you on the mailing list, and you'll see exactly what this methodology is all about. And this week in the market, well, the market ended the week on war worries over in the Middle East. Ballistic missiles are flying all around, and the market is very fearful of an escalation. That's the big one, folks. What had been a pretty good week saw defensive put options being bought as the market closed for the weekend, because nobody knows what's going to happen over this weekend. And our weekly stock analysis video, well, we take a look at advanced micro devices as their growth numbers continue to, well, grow. We wonder why this stock isn't doing much better, and it could be due to such rivals as NVIDIA. Yeah, you've heard of that company, right, folks? And our ETF video, the tech stocks led the advance for most of the week. The top stocks in the tech ETF that we picked, the first group of stocks with the highest clean surplus ROEs, are up 28% for this year, while the market is up about 2%. So with the rest of the half of the year ready to go, these tech stocks are doing pretty well, folks, so you got to see what they are. And we'll take a look at that as we go along. Now, let's look at the market. This is the S&P 500. The red lines are volatility bands. That center line is the 20-day moving average. And you can see that we just kept climbing up. We went down to test this 20-day moving average, about almost 4 weeks ago, and we've been climbing ever since, and we hit the top, and now we're coming back down. And even with that big decline on Friday, we still are barely touching that 20-day moving average. Now down here it looks like this indicator is pretty even, but it'll show up better in the next slide. Now remember, last week we were talking about these bands getting closer, and when they get close together, they usually spring, or the market springs one way or the other. And since the market was already at the top, the next spring we thought would be downward. And yeah, and it certainly came rather quickly for us on Friday. And you can see way back over here when the bands came together, the move was also down, but the 20-day moving average had been coming down. And so that was a pretty good indication that we were going to get a decline in there. And when the decline came, it came pretty quickly, didn't it? Yeah, just 3 days, and it was down at the bottom, and then it almost made another double bottom in here, and then it has been up ever since, doing very, very nicely. So we'll see what happens on Monday, well, over the weekend, which will dictate how the market opens on Monday. And when we look at the candlesticks, there's the S&P 500 again. Now, we are looking at this green line is that 20-day moving average, and you can see we're almost down there again. This red line is a 200-day moving average, and that was tested back over in here about a month ago. That was that low in there where we just had those 3 or 4 days of decline, quick decline, and then a rebound. And this blue line down here is a 50-day moving average. Now notice all the moving averages are pointing up. But we were talking about this indicator up here. Here's a double top, and then it came back down, went back up again, and then this little decline right in here, we thought that was the beginning of a rather larger decline, and it just didn't occur, and the market kept going up. But now we're looking at possibly this declining top in here. So we call this a divergence, or part of the divergence, because this indicator is reaching a lower high while the market reached a higher high. So that's what has us worried about a decline down to the 20-day moving average for sure, which will probably happen Monday. And then we'll see if it goes any further, if the worries on Wall Street have abated by that time or have gotten worse, and then we might go down to this 200-day moving average again. But we are overbought. We can remain overbought for a long time, but right now with the war worries going on, we might just see further decline, at least on Monday, and then the market will straighten itself out, and we'll see what happens. Of course, we can get all kinds of good news over the weekend, and we still, what happens, Monday is usually a weekday, except for last Monday. It was pretty good, actually. So anyway, we'll just have to see. This is a worrisome time, and there's market fears out there. And the market is overbought. They think it's overpriced. A lot of the technicians are saying that. So a little correction would be nice. And last week I did say that one of the analysts that are in a trading group that I follow every now and then was saying he would like to see a flush out this past week, and then that would be a buying opportunity. So we'll see if this is what's causing the flush out, which is the war. There's always some reason that causes a flush out. And then we know we have a growing economy. Inflation fears are abating. And so we're looking pretty good out there. And the tariff situation is starting to get ironed out. So we have a lot of good news out there. Right now, it's that war worry that we're worried about. And went for portfolio protection. Now the SPY closed at 596. SPY is 1/10 of the S&P 500. So the SPY closed at 596. Guess where it closed last Friday? Right at 600. So in other words, with this big decline that we had yesterday, and so I'm recording this Saturday morning, the big decline that we had yesterday on Friday just negated the upward move for 4 days during the week. So we are right about at the same point that we closed at last Friday. And these puts down here that are portfolio protection are right around 12.5% below this area in here. So if we do get a big flush out, then these puts will come into play. And depending on the makeup of your portfolio, you'll be fairly well protected. So folks, that's where we stand for the week. We started out at around 600 on the SPYs. We ended at 596. So last week was just negated all by Friday, all on Friday, I should say. So anyway, we have protection on most of our portfolios. So you go out, you have a good weekend, have a safe weekend, be with your family. Just take your mind off the market because it opens back up here again on Monday. And folks, you stay safe, and we'll see you back here in a couple of days.